Again, how low can you go? Hey, good morning, everybody. Come and tell how are you? Let's get on with it. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, hey, man, what's going on? Sup? Good morning, Pit Pirates. Good morning. Arr, arr, Pit Pirates. Arr. That's a good cup of joe, yo. Anyways, welcome. My name is Wayne. I'll do some technical and fundamental analysis today. When I was setting up the YouTube video today, setting it up, I had to look at my phone to know what day it was. Hey, it's Wednesday. So I think the only thing on the calendar this time of month is probably home sales. I can't remember if it's existing or new home sales. I think existing. Anyway, so we got a little bit of news going on. Well, I'm hoping for an update in the stock market. That's what we talked on Sunday. On Sunday in the day trading group, we said the stock market would be down Monday and Tuesday, maybe up on Wednesday, stabilize around Thursday and Friday. And that has to do with a lot of the bigger tech companies reporting. What is it? Google and somebody else. Anyway, so it'd be great if today was sort of a recovery day. You know, at least an update in the stock market versus yesterday. I've been watching Japanese government bond yields. Everything's been good, okay there. So it's been an all right opportunity to buy some yen. Now it was mediocre performance over the night, and that's probably because we're transitioning from 2 down days to maybe an update today. So maybe we have some weakness, and we'll take a look at that. And again, you'd look at Japanese government bonds. So we can talk about all that wonderful stuff. We can talk about the charts, whether this moving average or that pivot point or this higher high begets a lower low. We can talk about all that. Just ask questions. I consider myself a servant. So let me know how I can help, and I will do my best to do so. Ask questions, get involved, treat each other with dignity and respect. Exhibit lightheartedness, but at the same time, professionalism. If you need additional resources besides these daily live streams on YouTube, if you look at the description below the video, there's a link to my book. There's a link to free video training courses. There's a link to paid video training courses. There's a link to purchase for $5, my chart templates for MetaTrader 4 or 5, and also there's a link to tradersway.com, the foreign exchange trading broker that I recommend because they exhibited to me ethics, business ethics. And it sounds simple enough, right? That you place a trade and they enter it into the interbanking system and everybody's happy. Well, the day the Swiss National Bank pulled the peg, a lot of brokers around the world got into trouble, including 2 of the biggest foreign exchange brokers in the world. They got in trouble and they lost, hundreds of millions of dollars. Well, why? Well, apparently they were trading against their clients. Didn't execute the trades. Just figured their clients would lose the money, so why execute the trades? Might as well just keep the money. And those brokers went out of business, as they should, because that's a lousy business model. Okay? Any business model designed around value destruction should go out of business. And great. Instead, on that day when those giant brokers went out of business, I contacted Traders Way, and I'm like, how are you guys doing? Everybody's freaking out. Is it the end of the world? Or what's going on? And they're like, hey, everything's fine. Boom. Earned my loyalty and respect right then and there. Honestly, I said, you need to send out a press release. And they're like, that's a good idea. I know. Isn't that great? Just simple. If you want a trustworthy foreign exchange broker that seems to operate with business ethics. Besides that, fast execution speed, narrow spreads, huge swaps. Yeah. Do what the Wayne do. Tradersway.com. Link is in the description below. What's going right in the world today? All right, so let's look a little further out than 15 minutes. How are we doing? Yen has been strong and maybe has topped out. Well, that's what I talked about on Sunday night. So here we are on Wednesday. Yeah, maybe. Now, I think I'm down to 1 yen long trade, but it's only been on for an hour or two. I'll tell you what, last night, probably right after the day trading group meeting, I was short Aussie yen. And at that time, I think I was up 150 pips. You know what I did? I took profit. and that was just from the New York session to the Asian session, right? I took profit because I expected, so like it was down like this, and I expected some sort of up, and then, maybe today, tomorrow, the next day, next week, some point, another move down. And I'm like, you know what? I'm just going to take that profit. You know what it did? It went all the way back to my entry. So I believe I sold at like 92, and I took profit, and then I looked at it this morning, and it came all the way back to 92, and then did that, which means it would have gone all the way back, given me 0 pips, and then dropped. Now, it only dropped 50 pips since then. So anyways, I got my eyes on that prize. Maybe I'll re-enter, maybe I won't. Okay, but right now the U.S. stock market is set to open with green, which when you see a down day or down market conditions, green on the screen very often means someone's just going to sell it at lunchtime. But anyways. U.S. diddly dollar still strong, yen strong. That's the name of the game right now. Euro's giving some back, Kiwi's still weak, Aussie trying to regain itself. My thought there is the central bank and the government of China have been doing things to try to, stimulate their economy. They've added liquidity through like small business lending. They've cut the RRR. They've made like real estate loans standards a little bit easier. And I think in some cases, because of the shutdowns or lockdowns, some people with mortgage payment problems, they've gotten their mortgage covered. So they're trying stuff, and it's good stuff. It's just not big enough stuff. You can't close 84 cities and say, well, we'll make borrowing money cheaper. You're like, borrowing money? What do you... So, but, the next thing is COVID numbers are down in Beijing. And I think at some point, maybe today, maybe tomorrow, maybe next week, we're going to maybe get a scenario where we play the plausible reopening of China play the reopen play, trade the reopen play. And that would be pro-Aussie, pro-Kiwi to begin with. Okay? So I don't know. I don't know how you want to trade that. So that's that. One way to trade all of this really is skippy scalpy. This is Bitcoin. What I wanted to do was my WTI. And, we were chuckling yesterday in the day trading group where I'm like, you made 300 pips on a pound yen trade, or I made 300 pips on a pound trade yesterday. But this moved the equivalent of 500 pips. So, we were joking like, you only made 300 pips? Well, that's okay. It's good enough. I mean, you're still learning. It's cool. Right. So anyways, what do you think? Something like that? or is this coming down? Well, with the stock market up, I would think oil would be further up. So maybe we're at 101.50. Maybe it comes back down to 101 or 100, and we try one of these things. Okay, skippity scalpy, oil's on its way. Okay, maybe. Or you can look at it on a higher time frame and say maybe it's more bearish than bullish. Okay, yeah, you could do it that way. You can see I have it marked on my chart where you're right. They're on a medium term. That's the trend. Okay, the longer term is still in play. Okay, so the question really is, what do you think will happen next? And one of the things I'm thinking is down, down, okay, down, up. Okay. So that's interesting. That's bullish. Okay. Let's clean this out. This move here is bullish, and this here move is bullish. And gold is just gold. Don't worry about it. But if you want to trade it technically, that'd be kind of interesting. Okay. So a little bit of risk on today, which ain't bad. Okay. Which means I bought a yen not long ago, like hours ago, not this morning, let's just say. But I felt like it was a little bit dangerous because I think the stock market's going to open up today. That would probably create some yen weakness, but that hadn't really happened yet. I was wise to take profit. I was wise to not short a bunch of yens last night, but I did one this morning knowing that, technically it's there, but fundamentally maybe not today. So I'm treading lightly, so to speak. So that's that. Let's take a look at dollar pairs and see what's what. Okay. The trade plan last night, okay, was this. Up and down. Okay. You're welcome. Cool. Aussie. Okay. What did the Wayne do? Well, we were here last night. I put an X here based on the 4-hour chart. Then we looked at the 1-hour chart. Then we created a trade plan. Then I threw down a trade, and it made money. That was the easiest. It wasn't even a great price, all that kind of stuff. It was just we were going to get a retracement, and then it's going to drop, and now I'm making money. That's what the swing trade do. Day trades. That's what the day trader do. Okay, let's change this one up a little bit. Let's clean it up, change it up. Let's go to day trading bearish bias. Zippity-doo-dah into this chart. What was the trade plan? Sell at 16589, which is right there. And cool, you bring that across. It's a roll reversal and simple day trade down. Okay, that was yesterday. Last night it would be up, and then you take a shot down. Now, has it made a lower low yet? No, but you're in, and you're profitable, and it comes down to what happens the rest of the day. Okay, old golden bones, you got it? Really, really simple day trade. Essentially a follow-up to yesterday. It's probably a 382. It's a roll reversal. It's a daily pivot. It's a lower high. It's a moving average. Okay. So you can call it an hourly 21 if that's what you like. Okay. Let's do here. Okay. So it's all good. There you go. Hey, my pleasure. Have you subscribed? Hey, OG. Good. Just want to make sure. I'm going to start checking IDs at the door, eh? Wait. You have to subscribe to get in here. I can do that, can't I? I can lock it out on YouTube and say subscribers only. But you know what? I don't mind anything. I like doing this with you guys every morning. I think this is my contribution to just slightly, just ever so much making the world a tiny bit better. Okay? That's it. I like this. This is like my good deed of the day. I mean, you know, and to think that it's been 20 years of days, that's cool. I mean, I really like doing this. So even when I get heckled and people get mad at me or they say mean things, and I got you, that comes with it. But, and sometimes I'm bitchy and I say stupid things like, dude, grab the mic for 6,000 hours and try not to say something stupid. It's hard for me. But at the end, if you look at the aggregate, I think we have something very good. I like what we do. I like this process. I'm really tired right now. But this is, you know, one of the best hours of the day. This is really neat. So thank you for your contribution to a community that for at least, let's say, an hour a day makes the world slightly more bearable. But what I like is I see you developing more and more as a trader and improving your skills more and more. And that leads to a real world opportunity where you can change your life. And I like that. Yeah, that's true, Lucas. It's very difficult for me to measure that. But I've seen it in many people, right? I've seen it in many people, which is good. So, but that's all. All right. So taking a look at this, this is said bullishly, but of course I'm not bullish. So let's change this up a little bit. Same as everything else. And no pullback yesterday. No trade. No, thank you too, Rizwan. By the way, Bloomberg contacted me and wants me to write a book. I keep saying, no, I'm busy, I want to do other things. But then I was thinking about it today. It would be interesting to write another book. Especially with the different publisher, Wiley Publishing, you know, the largest financial publisher in the world with a 100-year history. That's cool. But something about like Bloomberg is kind of interesting because it's only for finance people and investors, right? Like they don't have another wing, you know, like Bloomberg children's books. So that'd be interesting. I should just respond like, give me 50 grand and I'll give you a manuscript. But you know what I was thinking is I take all the great, not just economists, but, you know, back in the day, let's say a few hundred years ago, economists were also philosophers and mathematicians and very often government leaders. So, like, I could write about Adam Smith. Well, if I'm going to write about Adam Smith in regards to maybe the, foundations of capitalism, well, you're going to need to talk about Rousseau and his work on rents during the corn laws, the English corn laws of, I don't know, 1522 or something, right? So you write about Rousseau. You would write about John Locke, this idea of private property. And so if it was an investing book, it'd be interesting to just write about economic philosophy, the history of economic philosophers or something, right? And you can go there. But then I think, well, like you could write about Isaac Newton's contribution to economics. Yeah. Yeah, he invented calculus and did the whole gravity thing, but he did a bunch of other things. And it'd be interesting, like, to write about that. Well, what about Gauss and chemistry and physics? And how does that relate? What could we learn from these guys as traders? And I just keep thinking about, yeah, there's a lot of interesting things going on that, I could write about trading and investing in a way that nobody else that I know has ever written. Like, think about it. I like to talk about scientific methodology in regards to improving your trading. Well, then that just begs a question, who were the main scientists at the time that invented scientific methodology? What were the lessons they actually wrote down? And what could we take away from that as traders? Even though, it's made more specifically for, physical scientists that are measuring things in a lab. But, dude, we measure space and time, right? Price and time. And we can learn from very similar ways. It'd just be interesting to maybe to write a book like that. Okay. Okay. Anyway, so let's do that. So dollar's still strong. That may change around the stock market open, so be careful. Uh-oh. Hang on. I think I got rid of the chat. I accidentally got rid of the chat. Hang on. I have to bring the YouTube chat page back up. But I was just thinking about like, who else would I put it, what other, let's say, scientist or philosopher could we borrow from when learning from trading? And I was thinking about, well, what about psychology? Which psychologists? Would you do Freud? I don't know about that. I mean, like, Freud would tell you, do you look in the toilet before you flush? Oh, really? Well, that means something. I don't know. But does anyone, right? Oh, Milos would like to read that, your take on Locke and Rousseau. Yeah, and there's a few others that I would put into that category because that's the basis of this idea of private property, but also what do you do with your excess? You let's say you grow walnuts, you have walnut trees, and at some point you have so many walnuts, you can't possibly consume them all. So the choice that Locke would say Locke would say, look, I'm just going to let this rot in my backyard. And then someone else comes along and says, yeah, but your neighbors are starving to death. And he's like, I don't care. It's my shit. I can let it rot if I care. But someone else would come along and say, well, look, because your neighbor is starving, you have a moral imperative, keyword, or keywords, you have a moral imperative to trade. Okay? So that gets you to this idea of trading. And of course, now if we're talking about countries, you could argue Poland has a moral obligation to support Ukraine because they're neighbors and they have a shared enemy. So, so you trade. But I'm more interested in just this idea of because you have excess, you trade, and therefore because you trade, you have more of what you don't have, and you have less of what you have too much of, and your standard of living has gone up. But then you're enjoying life so much because now you're living a better life. You're sitting there smoking your Cuban cigar, contemplating, and you're like, I need to grow more walnut trees. And I need my walnut trees to be happy. I want them to produce more walnuts. I want them to produce better walnuts. See, that's the thing with capitalism. People that are not from a capitalist country or that don't participate in capitalism. I mean, you could live in a capitalist country and not be a capitalist, right? But if you truly understand capitalism, it rewards happiness. It rewards freedom. It rewards creativity. It rewards individualism. Okay? So how did that come together? Because which you may not realize if you haven't studied economics and political economics and all that kind of stuff. It's an experiment that's only been around a short while. Really, the only last 100 years has capitalism really taken place, and much of those 100 years, it's been competing with socialism. Socialism has failed miserably in every instance, and capitalism is succeeded in, I'd say, almost every instance. Now, is it perfect? No. Are there flaws? Yes. And so over time, we will fix those. And so now you have to say, well, over time, you mean in the future, who is going to fix it? And how are you going to fix it? Well, we don't know. But if you look in the past, it was radically different, and it has been changing and improving and refining and being more efficient and winning. So if you go back a couple of 100 years, you're like, where did this idea start? Where did that idea start? Okay. And I think it'd be very interesting to look at let's say the philosophy of investment, the philosophy of business, the philosophy of capitalism, and maybe how does that help you understand markets better? And I think that'd be an interesting book. Okay. But then on the psychology, the only thing I can think of is Marcus Aurelius that I would probably write about maybe on the psychology. He was around, what, 2,000 years ago? No, more than that. 2,500, 3,000 years ago? Marcus Aurelius. Let's check out Wikipedia. Oh, yeah, 2,000 years ago. Right? A little more than that. He was born, okay, and was Roman emperor. Okay, I don't want to read this whole thing, but you know what's interesting about Marcus Aurelius' time as emperor? Think about this. It was a period, because it was near the end. There was only 100 years after his death, and then after that, the Roman Empire fell apart. But he was the leader of the most powerful empire in the world at a time of plague and war. So what could a trader learn from him? And you're like, well, what do I care about government and a Roman emperor and stuff? He was a stoic. Have you ever heard of someone being stoic? I'm told all the time I'm stoic. You have to understand what that is, and that really, so I actually ordered some books, which might arrive today, on some of his teachings in Stoicism. So maybe I can learn from him and see, because if you believe stoic, what does Google say? A person who can endure pain and hardship without showing or feeling or complaining. So that is maybe, if you know, like I said in my book, when I realized I needed a mentor, but I didn't know anyone trading Forex, I created my own perfect trader. I asked myself, well, if I could even look for a mentor in Forex, what would this person be like? And I put down patient and disciplined and stuff. And stoic might be a quality that you would think a good trader has. Oh, Johnny read the meditations. No kidding. Right on. So, Johnny, do you think that's the right path? That I could pull out some of Marcus Aurelius' stuff and maybe write a chapter on, enduring pain and hardship, trader psychology. That's what my first thought would be that, right? And one of the things I talked about in the past was a story that Paul Tudor Jones tells about when he worked for a cotton trader in Louisiana. Right? And he said on one particular day, the markets were crashing, and the guy he was working for, the lead trader, the head of the firm, was just losing a huge pile of cash. It was a devastating day. But two of his clients walked in, two elderly ladies, wealthy as can be, but he's managing their money. And he's inside, he's just freaking out. And this is the worst time ever he just needs to be on the charts and managing the money and protecting everything. And the world is crashing. Oh my God. But then here comes two clients. And if you've never been to the South before, let me tell you, two elderly ladies walk in your office, it's going to be an hour and a half before you even get to the point. Okay? Bless their heart. Anyways, they walk in and he sits there, and Paul Tudor Jones says he was poised, he was elegant, he was generous to them, gave them all the time in the world. They had a very pleasant conversation. And Paul Tudor Jones says he learned a lot seeing this happen. Okay, because it will happen from time to time. So, anyways, so if that kind of behavior, so anyways, I wrote that kind of thing down a million years ago, right? So, anyways, he was part of the philosophical school of Stoicism, and that's where it comes from. This idea. Okay, so what do I say in my book? The whole point of the book is like, how do you maintain that stress? And I remember this used to be part of my presentation, right? Why do you plan? In fact, in my presentation, it starts out where in The Art of War, Sun Tzu says, an honorable general wins because many plans were made. So, but that's why you plan or how you plan or the purpose of planning. But the thing is, for us, yes, it makes you a better trader. Yes, you get into better trades. But the thing is, it's to manage the stress. Really important to manage your stress. And so I think that'd be an interesting thing to write about. So imagine now we go through, let's say, the top 10 philosophical minds in human history. Now, I know mostly Western history. In my book, I talk about Sun Tzu, but I'm not an expert in, I mean, look, I was educated in the Western world, so that's all I know, and I understand that makes me ignorant. But I know a little bit. So it'd be interesting to pull from what I do know from all these different schools of thought and say, this is what we can learn from Adam Smith. This is what we could learn from the Medici. Right? Here's what we can learn from Machiavelli. Here's what we can learn from Rousseau and Locke. And you start quoting, in the Leviathan, so you're pulling all these different things. And you're like, amazing that somebody like Marcus Aurelius could teach us trader psychology. Or at least we can borrow from that as traders and filter through that, right? What did Newton discover, right? That might be, what did Einstein? I like to talk about the power of your psyche and your mind. And this idea of E equals MC squared. Okay. M is the speed of light, right? Sorry, C is the squared. C is the speed of light. M is mass, and this is energy. Okay. So the mass of your thought, your idea. This is your idea. So your idea is huge, right? You're going to change your world. Not maybe the world, but you're going to take yourself and you're going to take yourself, whatever your measure is, you're going to change your life by a factor of 2 or 3. Maybe that's money. You're going to make 3 times, you're going to make 10 times the amount of money you used to make. But that's what you're going to do in the future. And you're like, that's great. I'm going to get rich from Forex. That's a great idea. How much does it weigh? The mass is very small. This number is very big because it's brilliant. But the interesting thing is the idea is important. Okay? But what's required to make this equate is you need a lot of energy, don't you? I bet you, for those that are starting to find success in Forex, it was a lot harder than you thought it was going to be. You're like, yeah, it took longer, it took more pain, you had to work more hours, you had to study more things. Now your buddies are like, hey, how's that Forex thing going? And you're like, you know what? I watched Japanese government bond yields all night. And you probably never thought you'd do such a thing 10 years ago. 5 years ago, 3 years ago, 6 months ago. And now you're like, dude, I'm watching Japanese government bond yields in real time and trading, right? You're like, wow. But this idea of like Einstein's contribution, right? To make your idea a reality will require a lot of energy. I traded for 5 hours last night in the Asian session and didn't trade. And it still took a lot of energy. Holy crap. I'm exhausted. Okay? It took a lot of energy even to not trade, but I had to analyze the whole time. Should I? But anyway, so like, if I could flesh this out a little bit more, it'd be interesting to like, this number, right? This idea, the mass of an idea squared to itself, is real and tangible. It just matters how much energy you put into this. If you want, I'm telling you, if you want to be a successful Forex trader, it just requires a lot of your energy. Think of it that way. You can decide, and you're like, yeah, I'm going to be a successful Forex trader. Hey, that was easy, right? Okay. In fact, what we're not, this number here is actually big. The real number that I'm talking about is the mass of your idea. So you're like, oh, I want to be a successful Forex trader. Oh, I want to get rich. I want to drive a yellow Lambo. Good for you. You totally can. Okay. Huh? You can do whatever you want, and I honestly believe that. Now, there are restrictions. Maybe your government won't do things. Maybe your society won't let you do things. Oh, you have green eyes? Forget it. You can't do it. All right. That's unnatural. Nature doesn't care about that stuff. Okay? Nature isn't a racist. Racism is unnatural. Certainly uncapitalistic. So, generally speaking, all things being equal, you should be able to do pretty much anything that you want. There are restrictions, but if with enough energy and time, really time could be a factor here, you can overcome those things as well. Okay? Not everything, but most things. If you want to be a success in Forex, you can be. I honestly believe it. Okay? Now, it might take you 20 years. I've been doing this for 20 years, and I'll probably be doing it another 20 years. You can do this. Okay? But think of it. If I've done 6,000 live streams for a minimum of an hour and a half each, then just live streaming, I have 10,000 hours, which, if that's all I did, well, then I would be an expert in Forex. Now, is it easy for me to do it every day? When I've been up all night? When I've been making money? When I've been losing money? It's worse. I'm telling you, it's hard when you're losing money and you've been up all night and you're like, oh, dang it, now I got to go do a live stream and I just want to yell at cute little children and make them cry. And, hey, kid, you want an ice cream? Ah, right? You're just more upset. You're not your best self, but you do it anyways. Well, when you're on vacation, when you're traveling on the other side of the world, when you're sick, okay? Yeah, that takes a lot of energy. Okay? So anyways, so that idea that you want to become a success in Forex, I believe you can if you simply put in enough energy. Even if you're not the smartest, brightest, fastest, slowest, I don't care. It doesn't matter. You put enough energy into it and you will be able to do it. I believe that to be true. But you have to get the idea first, and then you got to commit. In fact, I could change this and say, this is the mass of your idea. I want to be a Forex trader. Okay? This is your level of commitment. Not just committed, but committed times committed. You're you're extremely committed. And then you throw in an energy. Okay? I don't know. So we could write a chapter on Einstein. What could we learn from Einstein? Okay. Gauss's theorem isn't what I'd probably write about, but the idea of, I think Gauss, the first one, not the second one. I think his second one was his brother's son. But anyways, the first Gauss, who studied not just chemistry, I think it was, he did stuff with space, like not galaxies, whatever you call them, clouds in space. I don't know. But, you know, I think he was one that started with this idea of scientific methodology. Okay. Yeah, Gary says totally agree with totally obeys energy. Yeah, well, but that's the thing. There's a lot, I think, that we can borrow from nature. So to me, things like scientific methodology as an approach of, you know, test, measure, reflect, right? Test, measure, reflect. This is what, those skills are incredibly important to a trader. Okay. But anyways. All right. So let's do some yens. Cool. So I'm short one of these today on a corporate account. I don't remember which one. Was it pound? I might be short pound. Probably pound. Yeah, I think. Anyways, we'll leave it at that. Let's just go with where we is. So last night in the day trading group, we had a plan called Chow, and here he is. Now, let me tell you, just to carry forward a lesson from last night. When I threw down this trade, it seemed ridiculously far away. I asked people, I'm like, how many people think it's going to come up 150 pips so we can sell it? And people are like, 150 pips. I'm like, I know, like it could kick off this moving average and could kick off that. But, you know, what the charts say is the realistic trade, you know, is here. And so I threw one down. I'm like, this is a limit order. But it seems stupid when we were down here. You're like, wait, Wayne, we're at 90.50 and you're going to have it come up 100 pips to 91.50 and sell it? And I said, no, that'd be ridiculous. Not 91.50, 91.49. You got to account for the spread, Bubba. And yeah. Cool. Now, what else is going on? You ready? Look, you're going to get mad at me now. Look at the top. I mean, dude, you're staring at this through a microscope. And sometimes you need a telescope and you go farther back, farther out. You know what someone did? Sell a retracement back to the moving averages. Right? You've made 19 decisions in here, of which 17 of them were probably wrong. And all someone else did is, yeah, when it's up here, sell it. Okay? Now, here's the next thing that's a real biatch. I sold it at 92 yesterday. I got out on the bottom last night, and it came all the way back to 92. It went down 150 pips and then up 150 pips, and now it's back down. So by taking profit, which is way more difficult than entering a trade, holy schnicker schnocker. I got it like 10 pips off the bottom. Thank goodness. Okay? Okay? Okay. So anyways, you need to make a decision. Where are we going? Are we on our way down to 88? Okay. Okay. So if you make that decision, what you'll notice, let me zoom in. Because I had to trade, you see, like I trade Asia, but I go to sleep and I don't trade the European session. Okay. Ryan coaches the European session with the day trading group. So, right. So you can see my radical technical analysis. So I sold it at the 50% Fibonacci retracement. And I simply said, not higher high. Therefore, sell higher low, right? Sorry, lower high. Sell lower high. That was it. So I said, where do I sell it? Well, how about at the 50% retracement? High, low, lower high. And just make sure your stop is wide enough that you cover the 618, maybe even the 786. That's it. Lazy bones, really. If we change this chart a little bit, let's go day trading bearish bias. And you can see I sold it near the M3, which is better if you want to look at it that way. So from that point of view, I'm doing this where I got myself a 50%, which is also the M3, daily M3. And all I'm shooting for is not higher high. So again, right? So I sold the breakout yesterday. I got out in here, and then I resold it here, and maybe I can get this down to 88. Not today. But if it were going to go up today and knock me out, or if it was going to go up and knock me out, I think it would happen today. I think we could have a good day in the stock market today in a half an hour. So all of this could change and just pop up and take me out and you know. Right? Cold water. It's like treading in cold water. So anyways, and I guess I could even move this a little closer now. So where am I short? 50. And where are we now? 25. So I got 25 pips profit. Yay. All right. So whatever. That's that. That's how it all, and they're all going to be kind of the same. So the trade plan yesterday on pound yen, even though it hasn't really happened yet, is this. It's still valid. But we did this last night when we were here. So to have already done this, like, once again, you can't walk into New York trying to figure out what the frick is going on. You're going to get destroyed. You're going to get destroyed. Okay? You need to show up already planned everything. Okay? So anyways, yeah, you should know if you're taking this down. And, you know, you're already behind the 8 ball a little bit. Okay? And you're going to have to catch up. Okay, Kiwi trying to recover here. Much different plan. Or, well, not different plan, but different technicals. You can see the plan would have been like this and choppy, but this low, like if I change the time frame, let's go 15 and dive in onto this. What happened overnight is this. Okay. And now what, right? But the longer term play is this, and you can see it. And the top one you can't quite see, but it's probably like that somehow. Okay. So now you have to make the determination of, will it do this? Or will it continue up? That's what you're deciding. Okay. Now, you shouldn't be trying to decide what you think it'll do per se. You should have decided that last night. What you should be doing now is confirming the technical analysis. Again, borrowing from Goss, born in 1777. Okay, so after Adam Smith, because Adam Smith wrote The Wealth of Nations in 1776. So he must have been 30 or 40 at that point. So, so we're talking about, a generation after Adam Smith in Scotland, right? And that sounded Irish. Anyways, but the Scottish were going through an enlightened period at that time. Right? I think so. I think that would have been right. Scottish Enlightenment. What year was that? Early 1700s, wasn't it? '18th and 19th. Yeah. The union with England in 1776 meant the end of Scottish Parliament. Yeah. So, yeah, so after that, right? So early, yeah. So that's right. That's right in Adam Smith's, right? He would have been a young man, and then later, let's say around 1750, for example, he would have been knee-deep in the Scottish Enlightenment. And if you think about it, it's really interesting because he wrote the blueprint for the United States of America. Obviously, capitalism was part of that thinking. And you have to understand, capitalism was a theory. Okay? So England had 5 times the population and 36 times more money, but most of the universities were in Scotland. So the Scottish have always been very educated. See, the major change in international trade was the rapid expansion of America as a market. Very cool. Banking also developed in this period. The Bank of Scotland, founded in 1695. Cool. Royal Bank of Scotland, founded in 1727. Yeah. Cool. Anyways, the education system leading to, like the steam engine was invented in Scotland. Like the Industrial Revolution was created by Scotland. Capitalism and the framework for the United States of America, the largest economy now in the world, were invented by the Scots. And it's a tiny, poor little country that was ruled by foreigners and still intellectual. Yeah. So Hale's like, I'm from Scotland. Hey, right? Hey, my family has a castle in Scotland. All right. So anyways, you've already decided up or down. What you're deciding now is, if you're a bear, do you sell it now? If you're a bull, do you buy it now? That's what you're trying to decide. Not if you're a bull or a bear. Johnny's like, yeah, don't forget Carnegie. No, Michael, I make my own trades. Why would I copy someone else's trades? I've never even seen. I've looked at 1,000 track records of supposedly good traders on those copy trade systems, and they rarely have a Sharpe ratio above 1. Rarely. Which means for the risk taken, you don't even get compensated. I don't care if the copy trader has 1,000 trades in a row that are profitable. You look at the Sharpe ratio and you're like, yeah, that's because they have 150 pip stops and they take 12 pips as wins. And therefore one loss will wipe out, a dozen trades, let's say. And the Sharpe ratio says, stupid. Okay. But anyways, yeah, Carnegie is another great Scottish industrialist. Take a look at Kitty Cad yen. Okay. This is what I pointed out last night. Be careful here. But you can sell it up high. Just don't sell it on low. But Michael, if you got 5M, let me know. All right, so now Aussie dollar is, where are we? 71.20. I'm sure it's 71.50. So yeah, I'm up a whopping 30 pips on that one. Anything else going on? No, so I have 50 pips. Aussie yen, Aussie dollar. Huh, boring. And I'm out of everything else on this account, if you recall. So I can't remember the exact numbers, but I'm up somewhere between 15 and 18% for the year. I can't remember if it was 32 or 33. It doesn't really matter, but just chugging along, trying to survive a down market, unusual seasonal behaviors. So, like, if you're looking at your returns relative, if you've lost 5% this year, and NASDAQ is now down 20, on an absolute basis, you've lost money, and that sucks, happens. But on a relative basis, you're down 5, where other broad market, measures are down significantly more than you. So if you're down 5 and it's down 20, you've done relatively good. Okay. Commodities, do some oil again. Yeah. I was thinking about scalping oil this morning and just doing that and waiting for the yens. And I already marked this out. I said between 100 and 101. And I drew this line and all that. And I did that first thing in today's webinar. And we're there. We're there. So the question is, are you going to take it up today? JP says, hey, Benjamin Grant. Yeah. Well, if I start the book club, we will read a lot of that older stuff for sure. Huh? So the question is, do I start a book club and we just read more of other people's ideas, or do I write a book and write about the philosophic history of investing? I like the idea of just reading more. See, 'cause the issue is if I write a book, I don't learn anything really. I might flesh out my ideas a little bit more. But the problem is, like, why would I want to write a book? I don't really win if I write a book. Like, what, again, like, what's the upside? It'd be interesting. It'd be like a project, a hobby. But I could read the top 100 books of all time and grow. Why would you scalp gold? That's interesting. Really? Let me take a look at that. So you were a buyer or, Let's try to figure out what you're doing. Yeah, I guess this the velocity of this down move. Okay. Buy, higher high. Buy, higher high. Buy, higher high. So what did you do? Buy here? But that would only be one losing trade. It wouldn't be that much, would it? Boss says, write a book about the best books. Well, that's kind of what I'm doing if you think about it. If I'm writing about Marcus Aurelius, do you understand, like, he wrote books. It's interesting. Okay. So that's what I'm actually doing, boss, is if I say, okay, let's start with double entry ledgers of accounting methodologies developed by the Medici. Okay? And so therefore you would have to read Machiavelli and talk about the prince and this idea of failure to have trade, but instead to grow your economy through conquering. You didn't trust your neighbor, therefore you didn't trade with your neighbor, therefore little trade was done between you and your neighbor, and the only way to expand your economy is to conquer your neighbor. And now you have a larger economy. Why would you want to trade? Well, let's say the people in your economy make leather goods and you're neighboring, right? Because let's say you have flat pastures and no trees. So you raise a lot of cattle, you have a lot of beef, you have a lot of leather. Well, you only want to eat so much beef. You get sick of it, and everything is leather. But after a while, everyone's got leather. So when you see someone wearing something other than leather, you're like, I think that's beautiful. Look at that beautiful silk dress. So much more comfortable than this stupid leather I have to wear all day, right? So you want to trade with your neighbor because maybe they have access to silkworms, but they also live in, their elevation's higher, so they have forests, and so they have wood products. And same thing, the neighbors are like, well, we have everything we have is made out of wood, but we'd like some leather and all that kind of stuff. And silk is nice, but it makes it makes good armor against arrows, right? But anyways, so you're like, you want to trade ultimately. But back in Machiavelli's time, they didn't trade because Italy wasn't a country. There was just 100 different little fiefdoms, and they all had closed borders. And the only way to expand your economy was to go in, kill the royal family of your neighboring country, make it your country, and now you inherit all their natural resources, being human and physical capital. But a terrible, costly way of doing business. But it's a great way to say, you know what, this is what the world used to be like. Eventually, society found a better way, right? We have to think about that. They're like, okay, attacking to expand your economy is so much more difficult and more expensive than just having peace with your neighbor. And say, hey, I understand your differences, and I even appreciate some of them. Some of them I don't, but I could live with. But the thing is, why don't we work together? Let's just trade. Let's improve the standard of living for each other. And by the way, in your first economics class in university, you actually do the math on this. You always do this idea of one country makes radios and the other one makes bicycles. And and so how many, you have country one and country two, and how many radios? This one could do 10 radios and one bike. This one can do 4 radios and 7 bikes. What are the terms of trade? And who has the absolute, okay, if any, absolute advantage, but then, comparative advantage, what terms of trade are they both better off? And what would the equilibrium of that be? So now you can do your Nash equilibrium and find out exactly where the equilibrium will be based on everyone's best interest, right? And you do that in your first economics class, but to then talk about the history of that. Because at some point, people had to find out, okay, after Machiavelli's time, you had Genoa and Venice. What changed? Black Plague. What happened there? The kings died. The landlords died. So from that, suddenly entrepreneurialism was important, and people had excess resources that they could trade. Also, those two cities were, developed better shipping standards, better banking standards. They invented things like insurance. And because the ships got better, they were able to travel farther away and trade their excess resources for scarce resources. And standards of living went up. And so that old system of, Italy became more and more unified over time. Just really interesting. So you could write about all of that and be interesting, but it's already been written down in history. So I would just be rewriting other people's books, but from the idea that I've filtered it through a lens and how can you become a better investor or a better trader, or just be more educated in your industry of where were we 2,000 years ago? What did we learn then? And how does it impact us now? I'm telling you, if I wrote a chapter on trader psychology by Marcus Aurelius, you'd be shocked, flabbergasted, dumbfounded, because he'll sound a lot like your your YouTube spiritual leader who live streams every day. And you're like, oh my God, this guy's just totally borrowing from what Marcus Aurelius wrote down and the Stoics wrote down 2,000 years ago. Be interesting. Like, they sound like your self-help guru. I'm good enough, I'm smart enough, and gosh darn it, people like me. You're like, wow, that's a direct quote from Marcus Aurelius. So here's the thing. If you're just figuring it out now, hey man, that self-help book was written 2,000 years ago by the emperor of the largest economy in the world. Boss, I haven't read any books on Forex, so I don't know. Because when I started, there were no books. Michael, yeah, you can do the mentorship. I do have the time. It's on the website, so just join FX Bootcamp, and on the bottom, fill out the form, and we'll talk about it. Well, that's good, Meta. Now we just need 9,999 more people that would buy the book. But the thing is, I'd asked this time, I'd asked Bloomberg, how much would you price it? Because I never asked that question to Wiley. I'm like, how much would this book be? I never thought about it because, again, I never read anyone's book. I just assumed a book would be like, I don't know, 20, 25 bucks. And it came out and it was like 60 bucks. I'm like, holy crap, nobody's going to buy this book. But it's not my book. You have to understand that when you publish, right? It's not your book. I sold the rights to the book before I even wrote it. So it's their book and they sell it for 60 bucks. I'm like, really? It sounds expensive. So I'd asked Bloomberg, well, what? But I don't need a PhD in economics, so I don't know. Write a book. It'd have to be a hobby. Exotics still getting crushed, right? Things really changed. I'm out of all those trades. Yeah, everything's just fine. So I guess I'll probably just leave you guys now for today. Stock market's going to be opening soon. I got to get ready for that. I might be skippy scalpy oil today. I haven't quite decided. Maybe if it tickles 100, I'll try. Meta says, you bought my book for 70. Yeah, amazing. I worked hard for it, I can tell you that much. Golden Surfer says Bitcoin can get dragged down further depending on the market open. Yes. Now, you have to, I'll say it one more time. Back on Sunday, when we were planning our week in the day trading group, I said Monday would be down, Tuesday would be down, Wednesday would kind of be slightly up, but certainly not down, and maybe sort of end the week sort of like moderately back. Like, it'd be interesting if in the next 3 days, Wednesday, Thursday, Friday, we kind of get back to break even for the week, right? Where we started at this price and we end somewhere near that price. So like NASDAQ was down 6%. And now over the course of 3 days, we get back to kind of where we were. Well, if that works out, then today is going to be an up day. I'm not saying it will, but after 2 down days, somebody's going to buy. Like, dude, we just hit negative 20 on NASDAQ for the year. That's a buying opportunity. It's also, if it goes lower today, then we're technically bearish in that market, but we're bearish for the year. But nonetheless, because it's been down, someone is likely to buy it. Okay? I don't believe we're in a recession. I believe we're still trying to figure out what the neutral price of future interest rates will be, which means when you run it through the various formulas, the stock market comes down in price, but not in value. I want you to think about that. The stock market, in my opinion, is coming down in price, and it should be. It's math, but the value's still there. Also, I think Google, like Alphabet, and someone else is reporting today. Maybe it's Facebook or something, but some of the bigger tech guys are reporting today. And if that's good news, then we get, you get your risk on thing. But right, but when you look at the present value of the let's say the market, the S&P 500, okay, is based on the future value, okay, over one plus I to the n period. Okay, and let me redo this so it's a little cleaner. My mouse is a little wimpy here. There we go. So the present value, right? What is something worth now is like, let's say, future revenue, the future value of money, the future value of Facebook earnings, okay, over 1 plus the interest rate, okay, times or to the n, and being how far out in the future. If you're talking 5 years from now, then what you do is the present value of Facebook today is, let's say, its future revenue stream over, okay, 1 plus, what's the interest rate going to be at the end of this year? Okay, 2%. To the n, well, the n is 1. Plus, 2 years from now, Facebook will have revenue stream, okay? 1 plus, what's I going to be in 2 years? 3%? So we're only going to do like 4 years in advance, right? To the, okay, plus in year 3, they're going to have revenue, okay? 1 plus the interest rate 3 years from now, 3.5 to the 3, and we'll do one more. And then the revenue stream that year, okay, over 1 plus 3.5 again. Oh man, this mouse is terrible. To the 4. Okay? So then you go back and say, I have no idea what these numbers are, but let's just take that future value, because now it's defined in the year, and let's say, I'll just make up a number, right? 1 billion, 1.25 billion, 1.5 billion, and 2 billion. Okay? But you got to crush it through this formula. Okay? Now, every year it seems to be making a little bit more money. The rate of change changes a little bit. Speeds up, slows down. Okay, speeds up again. Well, that's different economic conditions, different competing factors that lead to that. But the company is producing actual revenue stream. But the variable that changes over time is this. And, right, the interest level, but also over time, so it has a larger impact. So what happens is you crunch out this number and you get the present value of this future cash flow streams. This is a cash flow. This is finance now. Okay? Now, what if you're wrong and this stays not, this goes to 2, then it goes to 2.5, 2.5, 2.5. Or even 4 years from now, there's a recession, so it goes 2, 2.5, 2.5, 2. So that's, okay, that's different, right? So now you crunch the number at 2, 2.5, 2.5, and 2. And you'll get a different present value. The cash flows are exactly the same. What's changed? Level of inflation. And so what I'm saying here is this might be the value, the intrinsic value. The company is making money, it's generating profits, all that kind of stuff. Now, the price is based on, well, how much cash flow it actually generates, but let's just say this is accurate. But what you think future interest rates are going to be, and higher interest rates will lower the present value, and lower interest rates will raise the present value. But the company is the company, and the revenues are the revenues. And so we'll call this sort of like value and price. And the price changes based on this. But I think the real value of the company is in 4 years, it doubled its revenue from 1 billion to 2 billion. That's got to be good. It's a good company. But it may lose value, or it might fall in price, because this future $2 billion is worth less today if you think interest rates are going to go up and up and up and up. It's worth less because they haven't earned it, but in today's dollar, it'll be worth less. So again, I believe in the value of most U.S. companies. And when the price is down, I get it. I understand. The financial model dictates that. If this is the path, right, they call this a glide path. If the Fed jacks up interest rates to 2 and then leaves it basically around 2.5, okay, the stock market, the price of companies listed in the United States stock markets will be higher than if it's 3.5. The price goes up, but the companies are probably going to do just whatever they're going to do. Are you going to buy a new iPhone 3 years from now? Yes or no? That's all that matters. Well, if you say, well, 3 years from now, I don't think I'll have a job. I won't have any money. And I would have sold my old iPhone so that I could, put food on the table. All right. Yeah, then the price will have to fall because interest rates would probably be zero or negative. Because they won't have this, you won't buy another iPhone, and that's a whole different discussion. Okay, that's a whole different discussion. Oh, Microsoft, yeah, okay, Microsoft and Google are reporting today. So again, that's all. So I look at the stock market. 2 days ago, I said it would fall for a couple of days, it stabilize about now. And so we'll see if we have that update. Now, why would I think that? Because ultimately, I believe the value of the companies is higher than the price of the companies. That's why I would buy it. You understand? That's why I've been buying the stock market on the way down and individual stocks on the way down, because I think price relative to value is too low and that value is more stable. And in 2 or 3 years, what will happen is price will be higher. Maybe higher than value. Well, then my decision-making process, right, allowed me to take advantage of price being lower than value, and we call that alpha. Okay? And if alpha is higher than beta, I've forgotten how to do beta. It's this. Okay, there we go. If alpha is greater than beta, I did well. What's up, KG? All right, so that's that. I hope you have a wonderful day. Hope you have a wonderful day. That was $1.50. Yeah. So yeah, I guess I got to go. Stock market's open. Time to go to work. Watching oil come down. That's great. Maybe I'll be scalping it back up. James says, so the uncertainty of future interest rates is what upsets the market. Yes. Well, the uncertainty, but also what kind of uncertainty, that they're going to cut or raise. And we were on a glide path right? We were on a glide path of 25, 25, 25, 25, 25. And now it's on a glide path of 50, in some cases 75, and 50, 50, 50. And other people are like 50, 75, and then back 25, 25, 25. Okay. So what ends up happening is some people think this, and some people think this, and some people think, this. And all those things simply get put into your present value of future cash flow formula. Okay. So if you do over the next 10 years, it's this to the n is equal to 10, right? So they'll say if the period is equal to 10 years, okay, what's the value of this company? And you're like, well, that depends on interest rates, or you could say inflation. They'll tell you in the question. And so you just knock it out. That's all I'm saying, right, Paulie? Like James Paul? I'm just saying it's a variable. Nobody knows the future, but so you do a base case, a best case, and a worst case model. Okay? And you're like, best case is I goes up slowly. Base case is it goes up moderately. Worst case, it goes up really quickly. See, the worst case is they jack them up too fast, and yes, they get prices to come down, which is inflation, but they crash the stock market. So the present value of the stock market crashes because they put the economy into a recession and people start losing jobs. Well, shoot. Yes, they got inflation down, okay, but they threw the baby out with the bathwater. Okay? So that ain't good, but that could happen. And so you would price that out like 50 and 75 basis point hikes for the next 2 years, and eventually you extrapolate that out. 10 would be too far, but how about 3 over the next 3 years? Okay? And then you do one for your base and you do one for your best. Okay? So people have these models. Everybody, all market participants, and smart money anyways, have someone doing this type of model for them. And so when people start talking about 75 basis point hike, see, we're right now we're talking 50, but not long ago we were not talking 50 at all. That was radical. We were set on 25 basis points every single meeting. And in fact, even before that, we were only talking about 25 basis points in the first few meetings, and then nothing all summer, and then maybe at the end we do it again after the election. Then they got changed to 25 basis points every meeting. And then right after Powell basically told us 25 basis points at every meeting, then 3 days later at a speech, he said, well, yeah, we're ready to go 50. And then he looked at the stock market to see what would happen. So he tested the waters there. And so now we're all getting used to 50, but not just this meeting, then the next meeting. And now some people are saying 75. Look, it just keeps changing. And every time the glide path, so if we're doing more and more worst case scenario stuff like this, then the I goes up faster, which devalues future cash flows in today's money. So therefore, the present value of that future cash flow is diminished. And then what we're talking about, the present value, is equaling the value of the stock. So you're like, okay, yes, Google is going to continue making money every year for the next 3 years, but the value of money will change. The value of money. Well, you say, well, that's the interest rate. Well, instead of I being an interest rate, what about I being inflation? So therefore, the value of money has changed. Therefore, the current value of the company that's going to make that money in the future, which is worth less, has to be devalued now to reflect the lower value of future cash flows. Okay? And it's simple investing philosophy. It's like literally every professional would have some sort of idea, at least, of this concept. And I would say every single one of them would be able to do the math. Okay. And then, of course, Cap M. I'm not a believer in Cap M, but this is cash flow. Like, you would do this, for example, to say, to answer this question, what is the value of that apartment building? Now, you'll say something like, well, whatever the market will bear, which is correct, but you can't pull that crap at Harvard. They're like, answer the frickin' question. Well, philosophically, whatever someone's willing to pay for it. Yeah, that's bull crap, because that's actually part of the equation. And that's a scapegoat, cheat out of answering the actual question. But you can say, well, what's the present value of future cash flows? How much rent? What are the expenses? So you might say the present value of net operating income over time. And then you say, well, what about I? Levels of inflation, or maybe it's an interest rate. Why would we care about an interest rate? Okay, well, this is the opposite now of the stock market, but think about it. There are 3 buyers of this apartment building. Okay, one can borrow the money for 5%. Let's do this in a darker color. Okay, for 5%. The other one could do it for 4%. And the other one could do it for 3%. That's just their borrowing cost. So we'll call that their borrowing cost. Now, this is indirect because you wouldn't plug that into the formula, but that matters because an economy with high interest rates or low interest rates impacts these interest rates. But I wanted to get to this concept of value and price. Okay, so we don't know what the number is, right? Present value is equal to the net operating income over time based on inflation or interest rates. But who is going to get this apartment building? Which buyer? A, B, or C? Who's going to be able to buy this building? We're not even talking about price. We'll get to price in a moment. This is why real estate's always overvalued. Why is real estate always overvalued? There's an auction, okay, that's called, there's only one building for sale. In this case, there's 3 buyers. There could be 30 buyers. Who gets it? Whoever pays the highest price. So somebody always pays more than everybody else. This is why, like, in real estate, price is like probably number 6 on the list of things you care about. So who gets this building, guys? Okay, but why though, James? Right. So what happens is, and this is how people buy real estate, whether you're buying, let's say you're buying your house. Someone might say, I can afford $5,000 a month in a mortgage payment, let's say. What is that, $1 million? This person can afford $5,000. And this person can buy $5,000. Okay? So they're equal. The thing is, this means they can offer $1 million. I just do 1M. I don't want to do all the zeros. Okay? So this guy comes in, or this gal, she comes in and says, I offer you 1M. This person says, I can offer you 1.1M. And this person says, I can offer you 1.2M. Winner, winner, chicken dinner. Still $5,000 a month. The most important thing is they probably had better experience, better assets, more assets, better relationships with bankers and financiers, and have better levels of credit, and therefore lenders and investors charge less because this person's less risky. They go in and say, nice building. They crank out the formula, and it says 1.2 for them. This investor or this potential buyer filled out the formula and said, well, I can only go as high as 1.1, because if you go 1.2 or 1.3 to beat this buyer C, what happens is it goes to $5,500 a month, and that doesn't cover their net operating income, and that would become a loss. So if they did it and they put in 1.3, they would lose money. Now, some buyers do that. They're dumb. Okay? But they would lose money. But the math should be there, and you can figure out to a penny how much something is worth. Right? Right now, someone could come in and pay too much, but it's pretty rare, especially in like commercial real estate, where you don't even have to discuss price, because you got price, but then you want the intrinsic value. Somehow there's something more than net operating income and all that kind of stuff. Okay? So one rule in real estate is location, location, location. And Donald Trump will tell you he doesn't believe that to be true. Okay? Value, value, value is what he'll say. So it comes down to the math. You do the math and you're like, well, if it's in a bad location, let's say terrible, let's say there's a great neighborhood, a good neighborhood, and an okay neighborhood. You might find better value in the good or okay neighborhoods. The prices are lower relative to your net operating income. But maybe it's a little undesirable. Maybe you got to fix it up a little bit more than the other ones. So the price is lower, so you can afford to put in, $300K for windows. That kind of stuff. But what if the price was $500K below what it should be, because people look at it and they're like, I don't want to do the windows. And you're like, man, I talked to my window guy, and he thinks he could actually do it for $250, which is a good deal because everyone else is saying $3, but I'm buying this for $5 less. So I'm going to put $200K in net worth in my pocket right off the bat. Okay. Anyway, so what I'm trying to get to, guys, is there's a difference between value and price. And right now, price is falling in the stock market, but I believe customers are still paying for stuff. They're still buying. The demand is still there. Supply chain sucks. That means it's impacting sales because there's nothing to sell. Or what there is to sell, prices are high because inventories are low. But people that need will pay it. There's some money. Those companies are still profitable. They still have cash in the bank and all that kind of stuff. And They went through the COVID crisis, conservative. And so there's a lot of dry powder there. There's lots of savings. Everybody's capitalized because of all the liquidity that we just went through. And so, yeah, maybe there's a period of mediocrity, but it doesn't smell right now like crash. But then again, you look at NASDAQ, it's down 6% yesterday, 20% for the year. And you're like, price is too low relative to future value. The PV is too low relative to future value. Or another way to say it, the future value of these companies is greater than the present value. They're cheap. You buy them today, and in 3 years, you'll be very profitable. That's the decision. Okay, so how do you define the future value? Okay, and so anyways, so that's the process that you should be going to. And then you get to the point where you're like, buy the dip, and therefore the stock market could be up today. So we just hit 100, and boom, you could have made 50 cents just in the last few minutes on oil. So I got to go. I'm leaving money on the table. Peace on earth. May the pips be with you. May our profits be above average. Have a wonderful day. If you're in my day trading group, I will see you tonight at 7 p.m. Eastern Time. If you're in my day trading group, you'll see Ryan at 2 a.m. Eastern Time. And for everybody else, I'll see you in the morning. Have a wonderful day. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being a positive contributor to this community. Cheers.